Today, we're going to talk about the best investment strategies even in today's real estate market. Hi there, I'm Eileen Gilbo, and I am your Las Vegas luxury realtor. Why is investing in the Las Vegas market a good idea? Well, as you can see if you've been coming to Las Vegas for any great length of time, is that we have grown exponentially. Our market has just blossomed beautifully. And yes, during the Great Recession, it was a great time to buy those deals. Right now, we're actually finding better returns on our investment in the luxury sector. If you are looking to have a portfolio of investment properties, right now, buying new homes is probably one of the best strategies that you can use. And there's a few reasons behind it. Number one, you can actually get a better interest rate if you're looking to finance those properties because the builders buy down the rates in bulk, which us as single consumers can't do. And everything is brand new. The appliances are brand new. The air conditioning is brand new. The roof is brand new. So your cost for repairs will be less. The other thing is most of the new homes are being built in areas that are highly desirable, especially in the Summerlin area. And you can get a premium because you're in the Summerlin school zone. Another area that we are seeing a lot of success is with people buying properties to use as corporate rentals. And the reason is because we're bringing in a lot of C-suite employees who are working for various organizations, and they need someplace to live in the interim between getting here, putting down roots, and finding the home that they're ultimately going to live in. So in that interim point, they need a place to land, and usually not for a year. They need someplace for 3 months to 6 months, making corporate rentals a great way to start your investment portfolio. The other thing to look at when looking where to invest is look at the schools. If the schools are highly desirable, chances are you're going to get more activity on that rental property than you would in a school district or school in an area that is not as desirable. So make sure that schools are one of the priorities that you're looking at when you're looking to build that rental portfolio. And keep an eye on the schools, whether you're investing in your own personal property or for your portfolio of rental properties. Schools are going to make a huge difference in what you can get for that rent, and if you're going to have that property rented consecutively, you will have a lower vacancy rate if the schools are great. We talked about opportunity, but there are always going to be challenges. And some of those challenges that I see is there are still people looking to get into the short-term rental market as a cash flow in the Las Vegas Valley. That is going to be difficult. Not impossible, but difficult. We have some of the most stringent guidelines and laws surrounding short-term rentals here in Las Vegas. They are still allowed in North Las Vegas and Henderson, but again, to get those licenses to operate short-term rentals is extremely difficult and costly. So you may want to instead look at midterm rentals. And what that is anything that is 30 days, 90 days, somewhere in that range. And one of the best avenues that I have seen that sector work for is, once again, corporate rentals or people who are having a home built who need another place for a few months. The other avenue for midterm rentals that is amazing is traveling nurses. because they are being shipped, from one place to another every few months. So they don't need a year-long rental. But the rental rates for midterm rentals is higher than for a long-term rental, but it's less than for a short-term rental. But you can really have them almost anywhere as long as you abide by the HOA guidelines. So midterm rentals might be an avenue that you look to pursue. One other challenge in the rental market today, if you are an investor, is that rates are coming down. So during the pandemic, the rental rates went soaring. And now they're coming down to a more sustainable level, still higher than they were a few years ago, but definitely not as high as they used to be. And if you're purchasing these rental properties with a loan, your interest rates are probably pretty high right now. So you're probably not getting the full amount for the rent that you are paying for with the rates being as high as they are. So one way that my clients have gotten around this is they're purchasing properties for over $1 million. And that might seem crazy, but what it allows them to do is they are able to charge more money for the rent, which is going to cover the mortgage, if they have one, on that property. And because these million-plus properties are appreciating at a higher rate, they also have the opportunity when they need it to cash in that appreciation on that property. Meanwhile, those properties are staying rented because they're in higher demand. If you have a C-suite employee that's coming, they're not probably going to rent a 3-bedroom, 2-bath property that is really far away from their child's school. They want to rent in a neighborhood that is going to be most closely like the neighborhood that they're going to buy their actual home in. So before you decide even to sell your million-plus property to buy your next home, consider making it a corporate rental. You'll still get the appreciation, and if your interest rate is low enough, you'll get a great ROI monthly. If you're looking to maximize your rental portfolio, my advice to you, which is not unlike a lot of these high net worth or ultra high net worth individuals, what they do with their real estate portfolios, they buy and hold. They buy those properties, almost forget that they're even there. They rent them out and they hold them until they need the appreciation from that asset to fund another venture that they have. In Las Vegas, your average appreciation rate historically is about 8%. Now, there have been times in the past that it's maybe been 4% or maybe 25% appreciation. But if we boil those all down and take the average, you're looking at between 4 and 8%. And that's a conservative number. And yes, everybody brings up the Great Recession where we did lose a lot of value. But that was a nationwide issue, not just here in Las Vegas. If you are looking to maximize your real estate portfolio, you need to take advantage right now, buy new, buy over $1 million, maybe do a midterm rental or two, and hold on to every property that you have, because the appreciation is going to just continue to grow. And then when you really need it, you're going to have it. So when you're looking for your next investment property, reach out. I would love to chat. And even if you haven't started yet, get you on the path to being a real estate investor.